Today, tech stocks had a strong first half of 2021, but will mounting antitrust lawsuits and regulation put a damper on the tech trade? Plus, rising COVID cases in Japan forced the Olympics to ban spectators, a clear reminder that the pandemic is far from over. And finally, Bitcoin dips as investors search for safety. We catch you up on the crypto crunch. I'm Pippa Stevens, and this is CNBC After Hours. It was the worst day since the middle of June for all three major averages. Wall Street's anxious about the state of the U.S. economy, and cases of COVID-19 around the globe are rising. We'll have more on that later in the show. It was also a volatile day for Silicon Valley favorites like Google, Facebook, and Apple. These big tech names have been strong performers so far this year, all of them with positive gains since the start of 2021. But headwinds could be on the way. We saw China crack down on tech companies just this week, and the U.S. might be ready to do the same. Lawmakers are debating 6 bills aimed at reining in big tech, and 36 state attorneys general are suing Google over its Play Store dominance. So we asked CNBC tech policy reporter Lauren Feiner to walk us through what the legal challenges could mean for big tech.
Right now in 2021, big tech is under a lot of scrutiny, and it's coming from all sides. It's coming from lawmakers on both sides of the aisle. It's coming from state attorneys general on both sides of the aisle. Coming from the federal government, from regulators, from international regulators. I think the question will be, how far do these lawsuits go? How far do these new legal reforms go? There were 6 bills that the House Judiciary Committee recently advanced out of the committee. One of the bills is focused really on mergers and acquisitions, and it would shift the burden of proof to prove that a merger acquisition is anti-competitive from the government to the dominant firm that is trying to acquire another company. That's something that, lawmakers think could have potentially stopped a merger like Instagram, for example, by Facebook. And then, you have other laws that are more focused on structural aspects of these dominant firms. There's kind of this strange alliance of Republicans and Democrats who are for the laws and a strange alliance who are against them. So it really is not something that you can really put into buckets by party. So it's really interesting in that sense that there are a lot of people who are opposed to these bills besides just the companies themselves. I think you see a lot of people in venture capital, even in startups who, I think a lot of these lawmakers are thinking would be the beneficiaries of these laws, have some concerns over how this would affect them, how they would be able to exit their investments, once they are trying to sell to a larger company. You also have people who just think, this is more regulation than is necessary. The regulatory and legal actions against the big tech companies are really going to have pretty minimal impact on the tech stocks for the remainder of 2021. I don't think it's going to be that short of a time frame when we can see a real impact on these stocks, because you have to remember that these lawsuits are going to take years and years, including appeals. And these laws, even though they were advanced out of the Judiciary Committee, there's still a lot of pushback against them within each party and, within the House more broadly. So I think it'll be a while until we see the impact of these reforms.
Okay, let's get to our numbers round. Today, we're breaking down crucial data that prompted the day's sell-off. We'll start with 373,000. Time and time again, economists have pointed to the labor force as key to getting the U.S. economy back on track. Well, today we got some bad news. Initial jobless claims, which tracks the number of people filing for unemployment for the first time, actually went up last week with 373,000 filings. Many experts expected to see around 350,000, and investors took the rise as a sign that the economic recovery might be losing steam. Next, 2,000. Another piece of news that spooked investors today, while Olympic organizers in Japan are banning spectators as cases of COVID-19 continue climbing in the country. Experts now expect Japan could see as many as 2,000 new cases per day by August, right as the Olympics are wrapping up. That surge in cases could overwhelm hospitals in the area, and officials in Tokyo have already declared a state of emergency in an effort to slow the spread. It's another sign that the pandemic is not over. Rising case counts and mounting restrictions have investors looking for safety. And finally, 7. Cryptocurrencies just couldn't escape today's volatility either. Bitcoin tumbled as much as 7% earlier in the day, and altcoins like Ether and Litecoin, well, they traded lower as well. Investors are simply looking for less risky assets, like treasuries, to ride out fears of a stagnant economy and resurgence of COVID-19. You can get all the latest moves in both crypto and bonds by going to CNBC.com and downloading the CNBC app. That's it for After Hours. We'll be back here every Tuesday and Thursday, so be sure to catch us then.